Right now, the money sitting in your savings account is probably earning you almost nothing. Not because you did anything wrong, but because most big banks pay a savings rate of about a third of 1%, which on $1,000 is a few cents a year. Meanwhile, inflation is quietly shrinking what that money can buy. So your savings is not just sitting still, it is slowly going backwards. But here's the part almost nobody told you. There are completely safe, federally insured accounts paying 10, 20, even 30 times more for the exact same money. I spent more than 20 years in banking, and I watched good people leave thousands of dollars on the table for years, simply because no one explained this to them. So, today I am going to. By the end of this video, you will know exactly how to make your savings actually pay you in about 15 minutes without taking on a single bit of risk. Quick note before we begin, I spent more than 20 years in banking, including about 10 years as a branch manager and district manager. But I am not your banker, your attorney, or your financial advisor, and nothing in this video is personal financial, tax, or investment advice. Interest rates change constantly and vary by bank, so treat every number here as a recent example, not a promise, and check the current rate before you open anything. The stories I tell come from real experience, with the details changed and the people never named. I use a few tools to help make these videos, but the experience is my own. With that said, let us get into it. So let us start with a simple question. What is a savings account actually for? It is the safe place you keep money you might need soon, your emergency fund, your next big purchase, the cushion that helps you sleep at night. It should be safe, it should be easy to reach, and it should pay you something for letting the bank hold it. And that last part is where most people get quietly shortchanged. When you deposit money, the bank lends it out and earns interest. Some of that they are supposed to share with you. But big traditional banks have learned they do not have to share much because most people never move their money. Right now, the national average savings rate is about a third of 1%. That is the bank betting you will not notice. Now, here is the good news, and it is genuinely good. There is a kind of account called a high-yield savings account, and it does everything a normal savings account does, with one difference. It actually pays you. As I am recording this, the best ones are paying somewhere around 4 to 5%, compared to that third of a percent at the big banks. Same safety, same easy access, dramatically more money. And no, this is not a catch or a gimmick. These accounts are mostly offered by online banks, which skip the cost of running thousands of branches and pass that savings on to you as a higher rate. And crucially, they carry the very same federal insurance as your big bank, protecting your money up to $250,000. Safe, simple, and paying you many times more. Let us put real numbers on this, because the gap is bigger than it sounds. Say you keep $10,000 in savings, which is a solid emergency fund. At a typical big bank rate, that earns you a few dollars a year. The same $10,000 in a high-yield account at around 4% earns you about $400 a year for doing absolutely nothing different. That is $400 every year just for moving your money to a better account. Over 5 years, that is $2,000 you would have simply given up. And the best part is, it costs you nothing and changes nothing about how you use the money. It is the rare case where the safe choice and the smart choice are the very same choice. Let me tell you about a customer I will never forget. A careful saver came into my branch, someone who had done everything right, kept a healthy emergency fund, never carried debt, and that money had been sitting in a basic savings account for nearly 10 years, earning almost nothing. When I did the quick math on what a high-yield account would have paid over that decade, it was several $1,000s. You could see it land. Not anger exactly, more like a quiet ache for the money that had slipped away while they were being responsible. But here is what I loved. They did not dwell on it. That same week, they opened a high-yield account, moved the cushion over, and started earning real interest for the first time. The past was gone, but the future was fixed. Now, let me be straight with you because you may have heard people say, do not bother with these accounts anymore, and I want you to understand why. A high yield savings account is the perfect home for cash you need to keep safe and reachable. Your emergency fund, money for a purchase in the next year or two. For that job, nothing beats it. But the rate is variable, which means it can go up or down as the broader economy shifts, and lately it has been drifting down a little. And for money you truly will not touch for many years, there are other paths that can earn more, though they come with more ups and downs. So the honest rule is simple. Short-term safe money belongs in high-yield savings. Long-term money is a different conversation. But either way, leaving it at 1/3% is the one clear mistake. So how do you actually make the switch? It is easier than almost anyone expects. First, pick a high-yield account from a well-known online bank and check 3 things: that it is federally insured, that it has no monthly fee, and that it has no minimum you cannot comfortably meet. Second, open it online, which usually takes about 10 minutes and just needs your basic information. Third, link it to your existing checking account and transfer your savings over. The first transfer can take a couple of business days, which is normal. And that is it. You keep your everyday checking right where it is. You just move your savings to the account that actually pays. One short afternoon and your money goes to work. A few honest things to watch so this works smoothly. 1. Watch for teaser rates. Some accounts dangle a high number for a few months, then drop it, so check whether the rate is the ongoing rate or a short promotion. 2. Keep a small buffer in your everyday checking. Since transfers are not instant, you do not want to be caught short. 3. Make sure the bank is truly insured. Look for the official federal insurance, not just a logo that looks official. And 4. Do not chase the very highest rate every single month. Pick a solid, reputable account and let it work. The goal is not to win a rate-chasing game. It is simply to stop losing money to a savings account that pays you almost nothing. So, here is your plan, and you can start it today. 1. Look up your current savings rate. Most banks list it online, and if it is below 1%, you have found the problem. 2. Pick one well-known, federally insured high-yield account with no fees. 3. Open it, link your checking, and move your savings cushion over, keeping a little buffer behind. 4. Set it and mostly forget it. Just glance at the rate once or twice a year. That is the entire project. No risk, no fancy investing, no jargon. Just the same money in a better account, finally paying you what it should have been paying all along. The hardest part is the 10 minutes it takes to begin. Now, if a part of you is thinking, this sounds like more than I want to deal with, I understand. Money tasks can feel heavy and it is easy to leave things as they are, so let me make it small for you. You are not investing, you are not taking a risk, you are not learning a new skill, you are moving money from an account that pays you pennies to one that pays you real dollars and keeping it just as safe. That is it. The people who quietly build wealth are not doing anything magic. They just refuse to leave free money on the table. So this week, take the first step. Look up your rate. If this opened your eyes a little, share it with someone whose savings deserve better, and subscribe because there is a lot more where this came from. So remember this, your savings account has one job: to keep your money safe and to pay you while it waits. If it is doing the first part but not the second, you are only getting half of what you are owed. The fix is simple. It is free, and it is just as safe as what you have now. Look up your rate, pick a better account, move your cushion, and let your money finally start working as hard as you do. Safe and lazy is a choice. Safe and growing is also a choice. Now you know how to make it. I will see you in the next video.